Hello everyone, this is the quiz review video for your quiz on adjustments and the adjusted trial balance. This is chapter 3 in your Pearson lab. For this problem, we are going to be taking a company, Dual Digital Editing, who has just finished preparing their unadjusted trial balance. So they've recorded all their normal entries for the month, they've kept track of all of their T's, and they found the balance of all of those T's and put them into an unadjusted trial balance. Their debits equal their credits. They are to that stage. Now what they need to do is complete the company's worksheet by firstly recording the month-end adjustments, making sure that all revenues and expenses that happened within the period are represented on the company's books. And then secondly, by preparing an adjusted trial balance. And they're going to do both of these right on the worksheet. They're going to make their adjustments using this information. Firstly, they perform $300 worth of services for which the customer will not be billed nor pay until the job's completion. So we're working on a job for a customer. We've agreed that we're not going to bill this customer until the job as a whole is done. Secondly, we did a physical count of supplies that we had, and there's $600 worth of supplies on hand, which is not equal to the number that we have on our books, which happens at the end of every period, so we're going to have to make an adjustment for the amount of supplies that we used. We had the expiration of some prepaid insurance, which was $600 worth. We also had depreciation on our production equipment, $3,800 worth. And then lastly, we have one assistant. His name is Scotty, and he has earned $250 worth of salaries for days that he worked in December that he won't get paid for until the first paycheck of January. But since he worked during December, his expense for salary has to go on our books in December. So we're going to have to make an adjustment for that. So let's go one by one and make our adjusting entries. In the first one, we performed $300 worth of services for which the customer will not be billed nor pay until the job's completion. What is the adjusting entry for that? Well, it's a debit to accounts receivable, because even if we stop working on this job, we're still going to make them pay us for what we have done so far. And since we're going to make them pay us, we can put it into our receivables because they owe it to us at this time. We actually earn this portion of revenue within the month of December. So we start by debiting accounts receivable for the amount of money that we finished in services, which was $300. And because we did the job to earn, the part of the job to earn this revenue within December, we get to record the revenue in December. So it's a credit to service revenue for the same $300. In adjustment B, we did a physical count of supplies and found out there was only $600 worth of supplies left at period's end, but our book is showing that we have $2,300. Well, if we had $2,300 worth of supplies and we only have $600 worth of supplies left, that means we must have used $1,700 worth of supplies during the period. And since we use them during the month of December, we get to record the expense for supplies in December. So on December 31st, in our second adjustment, we're going to debit supplies expense for the difference between what our books say we have and what the physical count says we have, which is $1,700. And we're going to decrease our supplies by that same amount. So a debit to supplies expense, credit to supplies, all for $1,700. In adjustment C, $600 of our prepaid insurance is expiring. Well, we can only record the portion of insurance that we paid for, which covers the actual month that we are making our adjustments for. So if $600 worth of rent expired during December, we can only put $600 worth of insurance expense on our books in December. So on December 31st, in our third adjustment, we are going to debit insurance expense for the amount that expired, which was $600, and we need to decrease our prepaid insurance because that asset is not going to be on our books for what it was before because some of it expired. So we need to decrease the value of that asset by the same amount of expense that we're recognizing. Debit to insurance expense, credit to prepaid insurance for $600. In adjustment D, our production equipment is depreciating by $3,800. Well, the entry for that is always a debit to depreciation expense and a credit to that accumulated depreciation contra account. Again, we can't take it just out of equipment. GAAP says that we have to keep a separate account tied to it that shows how much value the equipment has lost over time. That is our accumulated depreciation account. So adjustment for depreciation is always the same. It is a debit for depreciation, a debit to depreciation expense, and a credit to accumulated depreciation for the amount of depreciation recognized during the period, which in this case was $3,800. And then lastly, our assistant Scotty has earned $250 worth of salaries during December that he will not be paid for until the first paycheck of January. So he worked a little bit before this period ended, but he won't be paid for those days until the next period. Well, the amount of the here and during this period has to go on our books, that $250. So we get to record that much expense during the period. Debit to salaries expense for $250, but we're not actually paying Scotty at this time, which means we can't credit cash because no cash is changing hands. What it is we owe him for the salaries, which makes it a liability every time we owe something. So we're going to increase our salaries payable liability by the amount that we owe him, which was again $250. Debit to salaries expense, credit to salaries payable for how much we owe Scotty, which is $250. And now that we have our journal entries, we can finish our worksheet. We'll start with the adjustments section of the worksheet. Again, we already have our unadjusted trial balance. We need to work our way to adjust our trial balance because that's what we're going to use to make our financials. So let's go one by one with the adjusting entries we just made and put them into the worksheet. In the first entry, we debited accounts receivable and credited service revenue for $300. So in the adjustments column, we're going to put that $300 in next to their respective accounts. Again, keeping in mind what is a debit and what is a credit. For the second entry, we debited supplies expense for $1,700. We credited supplies for $1,700. In the third entry, we recorded $600 worth of insurance expense with a debit. Let's put that into our worksheet, and let's also decrease or credit our prepaid insurance for $600 in the adjustment section. Depreciation expense had a debit for $3,800, so in that adjustment section we're going to debit depreciation expense of equipment for $3,800, and we're going to credit that accumulated depreciation equipment account for the same $3,800. And then lastly, we had a $250 debit to salaries expense. Let's put that in the adjustment section, and let's credit our salaries payable in the adjustment section for $250. So we just transferred all the numbers from these 5 entries into the adjustment section of our worksheet. And when we total that all up, we're going to come up with debits of $6,650 and credits of $6,650, which is good. It's exactly what we want. So we know that our adjustment section equals out. Now we need to turn our unadjusted balance into an adjusted balance. So let's go account by account. Cash had an unadjusted balance of $3,900. There were no adjustments, which means that his balance is still going to be debit side $3,900. Accounts receivable had an unadjusted balance of $6,300, but we just debited it for another $300 in the adjustments. And so since they are on the same side, we add them together. Accounts receivable should have a balance now of $6,600. Office supplies had a debit balance of $2,300, but we credited it for $1,700 in our adjustments. They're on opposite sides, so we subtract the adjustment amount from the unadjusted balance, and $2,300 minus $1,700 means we're going to have a debit balance of $600 because the debit side was bigger to start with. Prepaid insurance had a $6,000 balance. We credited it for $600, which means its balance is going to now be $5,400. Again, they're on opposite sides, so we're going to subtract out the amount from the adjustment, the credit amount, from our debit balance to get down to a debit balance of $5,400. Nothing happened to equipment in our adjustment, so we can just carry that on over. Accumulated depreciation of equipment had a balance of $8,500. We're going to add another $3,800 because they're both credits. Adding those two together gives us a credit balance of $12,300. Accounts payable had a credit balance of $5,000, and there's nothing that happened to it in the adjustment, so we can bring it on over. It still has a credit balance of $5,000. We didn't have any salaries payable before the adjustments, but now we credit it for $250, which means salaries payable has a credit balance of $250. Dual capital was $16,200. Nothing happened during the adjustment, so we can bring that balance right over. And in our adjusted trial balance, we're going to have a credit balance of $16,200 to dual capital. Same thing with dual withdrawals, had a debit balance of $32,000. There was no change during the adjustment, so let's bring our unadjusted balance over to our adjusted balance. Service revenue had a credit balance of $79,000, and we credited it for another $300 during our adjustments, which means since they're both credits, let's add them together and make it a balance of $79,300 on the credit side. We didn't have any depreciation expense on our books in our unadjusted trial balance, but we recorded a $3,800 expense during our adjustments, which means on our adjusted trial balance, we're going to have a debit balance of $3,800. Same concept is going to give us supplies expense of $1,700 on our adjusted trial balance. Utilities expense had an unadjusted balance of $5,200, which did not change during our adjustments, so we're going to have an adjusted balance of $5,200. Salaries expense was $24,000 for the period, and then we just added another $250 during adjustments, which means that we've got $24,250 worth of salaries expense in our adjusted trial balance. And like all expenses, it should have a debit balance, and it does. And lastly, our insurance expense, which didn't have any balance in our unadjusted trial balance, was debited for $600 during our adjustments, which means we're going to have a $600 debit balance to insurance expense in our adjusted trial balance. We add together all our debits and we find out that it comes up to $113,050. We add together all our credits, and all our credits add up to that same $113,050. And since our debits equal our credits in every section, especially the adjusted trial balance section of this worksheet, we are ready to make our financial statements. But that is where this problem ends. So good luck on your quiz, everyone.